Hey there, everybody. Thomas with Basecamp Trading. It is Thursday, August 15th, and we're going to take a look really quick here at cattle, and specifically I want to talk about limit moves. Now, a limit move does not happen all that often, all right? But with futures contracts, the market, they set a limit on how far the market can actually move for the day. Now, with things like cattle and hogs, you do get limit moves more often than others, but you can also have limits in the indices, for example, and in corn. It's really to keep a market from just having a runaway day when the market just gets scared and just runs and runs and runs. Now, the reason this is important, though, is because if you go limit, a lot of times if you go to limit and you stay on limit, that's called being locked limit. So let's say you were long cattle right back here, okay? And the next day, cattle gaps limit down and stays locked limit like this. You will not be able to sell your long to get out of your long position. So you'll be stuck in your long trade, taking the maximum daily loss, and the next day it can gap and go limit again. Now, once a market hits limit, the exchange will increase the distance for limit for the next day. So it gets harder and harder to keep hitting limit. And it's very, very rare to gap limit and then gap limit and then gap limit, but it has happened in the past. So it's something you have to be aware of. And this is one of the reasons, if you're not familiar with limits, a lot of traders can get in trouble because they'll see a market running down and they'll say, oh, wow, it's really extended, so it has to go the other direction, and they'll buy it. And then something will happen where it'll go lock limit and they won't be able to get out. This is why you never try to buy a market that's just falling through the floor if it's getting close to its limit move. We also saw a limit move the other day in corn here off of the crop report. This is why you need to know when crop reports are coming out. So crop report came out, corn shot through the floor, dropped all the way down, hit limit. And you can see where it just started dashing sideways. That's when it got locked, went limit, and stayed locked limit. So again, be aware of limits. It's not something to be scared of necessarily. It's something you need to be aware of, though, so you know how to trade them. Now, there's ways to hedge yourself if you do get stuck in a limit move. You can use options. You can trade a calendar spread, turn it into a calendar spread. So there are ways to hedge yourself, but in general, you need to know where the limits are for the markets that you're trading, and do not be trying to buy a market as it's getting close to limit, because you don't want to get stuck in a market that goes lock limit. That's it for today, everybody. Don't forget to hit that like button and subscribe if you haven't already done so. And until next time, happy trading, everyone.